Live from Singapore, this is Insight with me, Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. Ukraine fires US-made missiles into Russia, escalating the conflict that has just crossed 1,000 days into a new, dangerous new phase. Even as Moscow repeats its threat of a nuclear response, leaders at the G20 meeting show they can't agree on how to lower tensions. Investors are watching all this with one eye on Donald Trump and his picks for the new US administration that will have huge implications for global trade and markets. We'll discuss that with some voices very close to the action. Veteran investor Howard Marks is here in just a few moments. Later, we'll speak with CEO of influential market research firm Morningstar, Kunal Kapoor. And in our ASEAN Ahead special, the Indosat CEO tells us about progress and his partnership with Nvidia on building an AI center in Indonesia. The war in Ukraine has entered a new phase, with Kyiv launching its first attack on Russian soil using US long-range missiles and President Putin approving a new doctrine on the use of nuclear weapons. The 1,000-day conflict has left the world leaders divided on the G20 summit, even before the return to the White House of Donald Trump, who has said he could end the fighting in just one day. For more, let's bring in Bloomberg Asia senior editor Bill Ferris. Bill, put this in perspective for us.
Well, it does seem that both sides in this conflict are escalating at least their rhetoric and in some cases their behavior. Vladimir Putin had said a couple months ago that he wanted to kind of loosen some of the restrictions his country has on the use of nuclear weapons. He did so yesterday, announcing that he considers that Russia would consider a large-scale conventional attack, even by a non-nuclear power, to be justifying of a nuclear response in some cases. That came right on the heels of the U.S. easing restrictions on Ukraine's use of longer-range ATACMS missiles against Russia, allowing them to hit targets well inside Russian territory. And Ukraine made almost immediate use of that, launching a small barrage of missiles against a Russian military base. So we're seeing a lot of shifting strategies here. And the thing to keep in mind is January 20th. That, of course, is when President-elect Donald Trump takes office. And I think we see both sides here jockeying for every advantage they can get ahead of that date, when it's possible that Ukraine may lose a lot of U.S. support and where Russia may face increasing pressure to sit down at a negotiating table.
Well, Bill, we know that these G20 leaders represent 85% of the economy, and they're pretty chaotic at this point in time. No unified front. So what are we looking out for? How might this play out?
Yeah, it was really kind of a chaotic G20 taking place there in Rio de Janeiro, Brazil. You had, on the one hand, the U.S. announcing these easing of restrictions for Ukraine to strike targets in Russia. On the other hand, you have Germany has very publicly withheld its support for such an action. That came after German Chancellor Olaf Scholz spoke with Vladimir Putin last week, the first high-level communication between the two in over 2 years. Scholz is heading into some elections, and that prompted Ukrainian President Vladimir Zelensky to say that perhaps Scholz's focus was more on those elections than helping Ukraine at this point. So a lot of tensions there in South America at the G20, and it's clear again as we head towards that inauguration of Trump in just about 8.5 weeks, that the U.S. and its allies are not really on the same page when it comes to how to progress in this conflict.
continues to be a pretty fragmented world. Bloomberg Asia senior editor Bill Ferris, thank you so much for that. Against that geopolitical backdrop, let's take a look at how havens are doing at this point in time. I know gold has been rising for a third day in a row. Take a look where we are in terms of gold prices at this point in time. Gold trading at $26.39 as we speak, and it is a strong dollar story against the yen at 154.86, inching ever closer to that 155 level. Of course, we've been talking about 160 being a possibility, and New York crude trading at 69.38. Of course, the story of oil is about oversupply, U.S. inventories in particular. New York crude pretty flat, 69.38 is the level we're looking at right now. So, are investors looking past escalation given Trump's rhetoric on a quick end to the wars? Let's discuss this and more with veteran investor Howard Marks, co-chair of Oaktree Capital Management, which has more than $200 billion in assets under management. Howard, good to have you with us. It's such a chaotic world. It does seem like traders are underpricing the risk from geopolitics because even today, all eyes on Nvidia.
Well, you know, the world is chaotic. The future is never clear. Some people spend their time trying to figure out the future and pricing it. I say it's unclear, and we abstract from that. So, you know, we just try to look at individual companies and figure out which ones will grow, which one will repay their loans, and deal on that basis. We call that bottom up, not top down.
You talk about how it is about intrinsic value. Everything else is baloney. But how do you get intrinsic value in a market that's overpriced? I mean, valuations are skyrocketing, especially on the S&P.
Well, you say it's overpriced. I would say it's high-priced. Overpriced is a judgment call. And, you know, you think about what you think something is worth. You compare how it's selling relative to that. And then, in my opinion, that should determine whether or not you're aggressive or defensive. So I think we would agree that U.S. stock valuations, for example, are on the high side relative to history. That would tell me to be a little less aggressive than usual, a little more defensive, but not necessarily to get out. You know, getting out is really a big step. Most of the time, in my 55 years in this business, it's been a mistake. Either you get out and it goes up, or you get out and it goes down, and you forget to get back in and it goes up without you. So, you know, it's just a matter of calibrating, in my opinion, your behavior between aggressiveness and defensiveness. When things are a little high, as they are, a little more defensive than usual. But this notion of risk on, risk off, in or out, buy or sell, that's too black and white. It's not fitting for the world we live in.
The thing is, right now, we're seeing herd mentality. Moms and pops getting into everything that institutional investors are getting into. And usually, traditionally, historically, that's the time to get out.
Well, but again, I was with you until you said out. Because you know, just remember this, and everybody, you know, as I said, we're not market timers, we're not macro forecasters, and I told you that before the break, and I insist it's true. You could have said, if you had a great foresight, you could have said in 2019, I think there's going to be a pandemic, I'm going to get out. In 2021, you could have said, I think that Russia's going to invade Ukraine, I'm going to get out. In 22, you could have said, I think Hamas will attack Israel. I'm going to get out. You would have been right about the events, but it would have cost you a lot of money. And we not only do we never know what's going to happen in the bigger world, but we also don't know how the market's going to react. And so to be dogmatic and to say, it's high, I'm getting out, is a mistake. Warren Buffett, who always says it best, says don't bet against the United States, for example. And, you know...
but Warren Buffett has taken money off the table, more than $300 billion worth.
Why?
No, he says there's nothing to buy. Well, valuations are high.
Well, but what percentage? You know, people look and they say, well, Buffett sold some stocks. Does that mean we should get out? What percentage of his stocks did he sell? Probably rather small. So it's not a broad statement. You know, if it's a little high, and I say be less aggressive. If you want to sell 2 or 3% of your stocks, I understand. But Buffett's not selling all his stocks, and neither, I think, should anybody else.
Howard, you talk about how you hate making calls,
Right.
predictions, estimates, but Goldman came out to say that it sees a further 10% upside in the S&P
Yes.
from now through the end of 2025.
Yes.
Is Goldman right?
10.
10.
Well, that's pretty good, isn't it? On the other hand, Goldman, I think it's fair to say, put out a report 3 or 4 weeks ago in which they said that the PE ratio on the S&P 500 is high. So as opposed to 10% average return over the last century, they're projecting 3% for the next decade. So that's rather cautionary. It's not get out, it's not sell, but it's, moderate your expectations. On the other hand, a 10% gain between now and the end of 25 would be quite nice. So I think what this shows, Haslinda, is that investing in the short run is very uncertain, and nobody should think they really know what's coming. And most people should take an almost passive approach. The idea is it's good to invest. It's good to invest in the United States. It's good to invest over time. And it's bad to try to mastermind it in the short run with get in, get out. Now, if everybody gives up on getting in and getting out, you may lose a few viewers. But the point is, investing is a good thing. Do it early. Do it a lot so that you can build the nest egg. Don't screw it up.
You talked about how it's hard to do it on a short-term basis. Okay, let's take a longer-term basis. 4 years, the Trump administration, looking at who he has suggested in terms of his cabinet picks, Lutnick, for instance, for commerce, and probably Walsh for Treasury. How are you looking at that? How might that impact market sentiment and how this plays out?
Again, these things are very hard. Number one, what's going to happen? Nobody knows. His appointments are not firm. They have yet to be confirmed. His policies are not known. What is he going to do? Nobody really knows what he's going to do. Number two, what else will be going on in the world? He's not the only show. It's complicated. Number three, how will the market react to all these things? Number four, the president's influence on most things is usually quite limited. Number five, as I said before, our economy is in good shape. So in general, things are going well in the United States and/or better than most other places. And that's why things are high in the United States. So the situation is generally good, but you're paying a lot for it. We'd like to get a good situation at a bargain price. It's rarely the case. I don't think things are crazy high now, and I don't think it's time to get out.
How are you reading into the president's relationship with Elon Musk, for instance? He's been put in charge of the Department of Efficiency. We saw Trump at Musk's event, SpaceX, just today. Do you read into the potential of perhaps how Tesla might might gain from that? Do you see the potential of EVs gaining from that? How do you read into that?
Well, I'm not smart enough to know the answer to that question. I think that this is a very unusual situation, one we've rarely, if ever, seen before. A bromance, if you will, between a president and a founder of a company. There's no doubt about the fact that Musk is brilliant, idiosyncratic. People have been talking about increasing efficiency in government and eliminating fraud and waste for decades. I don't think anything's ever been done about it. And the question is, I assume that what's going on means that Musk will do more about it than has been done in the past, and then we'll get to see whether it works. But, this is just one more thing, which is so unpredictable and indeterminate that I don't think it's worth most investors doing anything about it.
So no point piling into Tesla?
No, no. The reasoning through which Trump's relationship with Musk and Musk's role in government produces an improved outlook for Tesla is very attenuated. I wouldn't go there.
Elsewhere in the world, China has been front and center. We've seen stimulus in an attempt for China to revive the economy. Do you think China's doing enough? I mean, I know you see value in some Chinese stocks.
China is attempting something very difficult. They had what I call the Chinese miracle. They had 10% GDP growth a year for a few decades when they were coming into the modern era. A lot of that, or some of it, was built on stimulus. You can't stimulate your way to growth forever. They've tried to back off on the stimulus, but that has caused a growth slowdown. That they don't want to have the full brunt of that slowdown. So they're trying to kind of calibrate. That's the word I use in many cases. They're trying to calibrate the right amount of stimulus to produce a good growth, but not an excessive reliance on stimulus. And stimulus sometimes leads to unwise behavior. It's not easy to get it right. I'm hoping they will. I know they're dedicated to the task. They understand the importance of 5% GDP growth. And let me just say, 5% sounds like a slowdown versus 10, but it's a well above average growth rate compared to the rest of the world.
But you talked about how it's challenging for China.
Yes.
It's attempting something that's so difficult. Why
Yes.
isn't China a value trap? Why is it still, full of value?
Well, I think because first of all, it has great potential to come into its own. I mentioned before that the U.S. situation is doing well, but high-priced. The Chinese situation has fundamental questions, but it's bargain-priced, which is better. You can't. It's all investing. It's a matter of relative choices.
But with the risk that its nascent recovery might be jeopardized by Trump's policies and further tariffs on the economy.
Well, if you can tell me what Trump's really going to do as opposed to his rhetoric, and if you can tell me whether Trump's rhetoric is going to induce behavior on China's part that makes Trump back off from his rhetoric, then I may know the answer. But nobody can do that.
Where do you see value in China?
Oh, I'm not close enough to the operating level to be able to talk about.
Have we seen the
industries or
end of the
companies.
crisis in the property sector, for instance? Is there a sense that, because it takes a recovery in the property sector to actually revive investor sentiment and confidence?
Well, any time you have an amount of building which is highly stimulated by the availability of capital, then you have to go through a period of adjustment in which the buildings that have been built are absorbed. And some have to be repurposed, some growth, you have to grow into that space. And that doesn't happen overnight, and it doesn't happen because the government turns a policy lever. It's going to take some time. The question is not whether they have to do it. The question is, will it bottom out? Will they stop adding excessively to the property stock, and will they put in place policies designed to create the absorption? My bias is that they will, and many people in the investment community describe China as uninvestable. To me, that word is music to my ears. I've made my whole career buying assets that other people consider uninvestable. And when you do that, you have a chance of getting a bargain. So I think that clearly China is on the pile of things that people feel ill about, and it's on that pile that you find the bargains. That doesn't mean that you should buy everything on the pile, but that's where you look for the cast-offs and the bargains.
So you've been adding to your positions in China?
Well, we have a good position in China, and have had for a long time.
Can you share some of that position in any way?
No, I don't go into names. But we're continuing to invest in China carefully, and when the fundamental situation is uncertain, you have to take care. But the availability of assets at beaten down prices is a great starting point.
All right, Howard, we have to live with that. Been a pleasure having you with us.
Thank you, Haslinda.
Howard Marks, co-chair of Oaktree Capital Management. Still ahead this hour, the CEO of Indonesian telco Indosat will be joining us for ASEAN Ahead. We'll dig deep into the company's AI ambitions and the partnership with Nvidia. Plus, we speak exclusively with Morningstar CEO Kunal Kapoor about the future of AI in finance. Keep it here with us. This is Bloomberg. Welcome back. Former Hong Kong media mogul Jimmy Lai has taken the stand to defend himself against national security charges in a case being closely watched in Beijing as well as the West. Lai hadn't spoken publicly in nearly 4 years after being detained under the China-imposed laws. China correspondent Min Lo joins us now from outside the West Kowloon Magistrates Court. Min, what has Lai said so far?
Yeah, this case is very closely watched. As you can see behind me, it's been raining all morning, and you can tell how interested people are because there was a long line of people waiting outside the courtroom this morning when we arrived. Obviously, the trial is ongoing now, and a couple of things that Jimmy Lai had said that stood out to me. He mentioned that he started Apple Daily, that pro-democracy newspaper that was forced to shut down in 2021. He started it because it reflects the core values of Hong Kong, which he said are freedom, freedom of assembly, freedom of speech, freedom of religion, the rule of law, and the pursuit of democracy. And that's interesting given that we know the national security law imposed by Beijing is a very broadly worded legislation that criminalizes secession, subversion, collusion with foreign forces, essentially banning all sorts of political protests in this city. Jimmy Lai also said that he denied that he has been involved in any sort of advocacy for the independence of Hong Kong. He said the idea is so preposterous, it's something that he never allowed his staff or his newspaper to mention. And he, by the way, is charged with 2 counts of collusion with foreign forces and 1 count of publishing seditious material. This is related to his role as the founder of Apple Daily, where he is accused of advocating for international sanctions against Hong Kong and China, and also using his newspaper to get people to go out to protest against that extradition bill, the proposed extradition bill by Beijing in 2019.
I mean, we know that Lai was detained in December 2022. He was denied bail. What's been the reaction from the international community so far?
Yeah, he's been detained since December 2020, so it's been close to 4 years now. And this case is not going to fly by under the radar because there's a lot of international media here. On Monday, you had a British Prime Minister specifically raising the issue of Jimmy Lai's deteriorating health with President Xi at the sidelines of the G-20 summit in Brazil. And you have US President-elect Donald Trump pledging to secure the release of Jimmy Lai. You have the European Parliament asking for the unconditional and immediate release of Jimmy Lai as well. And this comes hot on the heels of that mass sentencing of the 45 pro-democracy activists yesterday. That had already drawn condemnation from the likes of the US and Australia, for example. Washington vowing to impose fresh sanctions on Hong Kong officials, and Beijing responded to these Western criticisms, saying they are trampling on the spirit of the rule of the law. And we know Beijing has always maintained that the national security law is essential to maintain stability here in Hong Kong, and had urged other countries not to meddle in its internal affairs.
Min, thank you for that. Bloomberg's China correspondent Min Lo outside the West Kowloon Magistrates Court. Well, up next, Indosat CEO Vikram Sinha will be joining us for ASEAN Ahead. We'll discuss their partnership with Nvidia and how they're using AI to drive business growth. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. Taking a look at benchmarks in this part of the world. By that, I mean Southeast Asia under pressure along with the rest of the region. Of course, we're awaiting for Nvidia and how that may just provide the catalyst for the benchmarks to go higher, not just in Asia, but the rest of the world. We're also keeping an eye on Bank Indonesia out with a rate decision. It is expected to stand pat, and that's coming in just hours. It is expected to leave rates unchanged for a second straight month, delaying more easing as the weakening rupiah closes in on the 16,000 per dollar level. Of course, it is a strong dollar story right here. Governor Periwarjio said earlier this month, policymakers need to be cautious over risks, including a trade war, geopolitical tensions, and an uncertain Fed rate path. He expects the dollar and treasury yields to stay higher, suggesting he won't be looking to ease again anytime soon. Now, the world's most valuable company, we're talking about Nvidia, has had a remarkable run. So far, it's proven its ability to clear Wall Street's lofty expectations. And its third quarter earnings out later Wednesday, one of the most important market drivers left this year. Bloomberg's Avril Hong has a preview. Avril.
Yeah, this has gotten to be so huge a stock that its earnings scorecard is a macro event, and it's shown that it's also a star pupil. You think about its earnings, in the 7 out of the 8 results, it's managed to beat revenue even better. Perfect score, 8 out of 8, where it's managed to beat the street's expectations. So clearly, it has shown that it can clear the high bar that Wall Street has set for it. I also thought I'd highlight what we're seeing in the stock movement the day after and how it has 4 out of the 6 times in the past actually gone a different direction from the S&P 500. It's gone its own way, so to speak. And we are also seeing overnight how it climbed about 5%, leading the gains on the broader markets. Now, I wanted to highlight as well what we're seeing in its revenue streams, because obviously it's a key part of this from the data center side of the business. The revenue estimate for the third quarter consensus, if you can flip the board and take a look at this chart, is coming in at about $33 billion. And $30 billion of that is coming expected from the data center segment. And it's just grown. This chart shows you how it's just heightened in importance in the past year, almost double since a year ago. And this speaks to how it's managed to lure some of these key customers, right? The hyperscalers such as Amazon, Alphabet, Microsoft. That's really what's been fueling the AI chip boom. Flip the board again, because the key concern for Nvidia is whether it's going to be able to meet demand. You look at this chart that shows you the inventory to sales ratio, lowest in 2 decades. For clues on this, we're going to be keeping a close watch on what Nvidia says about forecast for this quarter. The estimate for consensus is $37 billion, but you look between the highest and lowest is an $8 billion gap. So it's a wide range, and this reflects the investor uncertainty about whether Nvidia is going to be able to ramp up the supply of its new chip lineup, the Blackwells, to meet this insane demand, as Jensen Huang has said. And of course, this chip release has been delayed because of some of these manufacturing issues. So these are the things that we're going to be watching really closely, as.
And against geopolitical background, of course, we have Nvidia looking for alternative markets to the US as well as China. Avril Hong, thank you. Once again, it is AI driving developments, including for Indonesian telecom provider Indosat, which has a close relationship with Nvidia. Joining us now live from Jakarta is Indosat CEO Vikram Sinha. Vikram, good to have you with us. We talk about AI and the importance of it, and you want to play a big role in Indonesia's AI ambition. How realistic is it for you, and how realistic is it for Indonesia?
Linda, we have taken action. Last week we had our Indonesia AI Day, and where we demonstrated that it is not a dream, it is reality now. And I have to tell you that early adaptation of AI will help Indonesia move towards 8% GDP growth, and it will help every Indonesian. And this is the journey we are taking with Nvidia, with support of Jensen Huang and the entire ecosystem.
But how far are you willing to go? We're talking about an investment of $200 million for an AI center. But if you take a look at companies like Microsoft, for instance, they're putting in more than $1 billion into AI infrastructure. How far are you willing to go? How much more investment are you willing to put in?
I think at Indosat, if you look at last 3 years, we have already invested $2 billion on digital infrastructure. You know, when merger happened on 4th January, we took it from a growth mindset. And if you look at our results, we have demonstrated that we want to make sure we enable the entire digital ecosystem in Indonesia. I think it is more than the investment piece. I think what is important is how we create the right ecosystem, how we make sure data, which is the natural resource for the country, how we are able to create consumption which benefit the people of Indonesia. It benefits the startup ecosystem. It benefits the state-owned company. I think that is the journey, Haslinda, more than the investment dollar value. And this is just a start, you know, and I can tell you, we are not doing it alone. We are getting support from everyone in Indonesia, the entire ecosystem. And during coming months, you will see it will give good results for the country.
Vikram, you say it's just a start. So in a time frame of 2 to 4 years, how much more investment do you think you'll be putting into the AI space and your AI ambition? Just give us a number.
Look, with my partner BDX, you know, who is with us, and Indosat, if you look at together, at least on the entire data center and digital infrastructure, anywhere between $2 to $3 billion US, we'll be looking at it in 3 to 4 year time.
What do you make of Indonesia's approach to tech and tech investment? Some say that perhaps it's adopting a very hardball approach. Take a look at what it did to Apple, for instance, banning, you know, the iPhone, banning the Google phones. If it doesn't come with you know, big investments in the country, how are you looking at such an approach from Indonesia?
Look, Haslinda, I think I've been in this country for 6 years, and I have to tell you, every country has to protect their interest, and it is important that the partners are also fair to the country first and the local partner on the ground. Personally, I feel that, you know, Indonesia is very open for investment. We are one of the good examples in terms of how we do business here. So I'm more confident that, you know, what you will see now will be something which is fair for the country, good for the partner on ground. And we need partners from all the names which you said. But it has to be something which is fair for everyone. And that is what you will see more in the coming years.
For Indosat, Ooredoo, where do you see growth coming from? You are big in, you know, the big cities. The opportunities actually are in the rural areas. What's your strategy to tap that potential?
You are absolutely right. You know, after merger, what has happened? We have got the scale to serve the rural Indonesia. And in last 2 years, you know, I spoke about close to $2 billion US. 60% of that investment has gone in rural Indonesia, eastern part of Indonesia, and will continue to invest there. So if you look at my capital market day, we said that our first focus is to grow the core. And this is a market where, you know, there is a lot of opportunity on the core itself. There are close to 21 million new customers coming from rural Indonesia, first-time internet users. We want to serve them. We want to make sure that, you know, we are able to give AI and 5G to everyone, to all. And that is the journey which we have taken. And you have seen our number speaks for itself.
What potential do you see in the new capital city, Nusantara? Lots of questions about whether or not, you know, Indonesia will realize its dream of a new capital. How are you positioning for that?
I think, look, we are very supportive of all government initiative. It is the early days now, and you have heard our new president, Pak Prabowo, talking about the strategy. It's a long-term strategy. And as a committed Indosat brand for Indonesia, we will help the government in this journey. It's a bold journey, and we all need to come together to help in this.
But what's the strategy for Nusantara for you? Where are you investing in Nusantara? How are you investing in Nusantara?
I think we are more focused on, investing on overall rural Indonesia. It is not a Nusantara strategy. It is an overall Eastern Indonesia. We are going to Jayapura. We are making sure that we ensure that Indosat is available everywhere. As you rightly said, there's a perception that we are a big city and we are strong there. We want to make sure with our scale and the success of the merger, we are able to serve every Indonesian.
Vikram, you've talked about how you want to be an asset-light company. What are you doing? Which assets are you getting rid of? And what are you intending to do in the next 12 to 24 months?
Yes, our strategy is to be asset-right, more than asset-light. We want to focus on our core strength, which is delivering customer experience, creating a digital ecosystem. We are looking at a few options, but let me tell you, our P&L and balance sheet is very strong. So it is not about getting rid of anything. We will do what is right for us at Indosat, and we are looking at all the options. And one of the options which we are looking at is our fiber asset. But the objective is to see how it can fuel us on serving Indonesia and driving our core growth, and also help us drive our home broadband strategy.
It is a very capital-intensive industry, and some say we will see consolidation within that industry. How do you see that playing out?
No, you are absolutely right. Especially in Indonesia, if you look at capex to revenue ratio, it is on the higher end. Global benchmark is 12%. In Indonesia, it is close to 22%. I think what is more important is a strong, healthy industry, telco industry, which will help Indonesia get more investment on the AI ecosystem. And that is where we are focusing. How do we grow the industry in the right direction? There is a lot of upside opportunity. If you look at ARPU is on the lower side. If you look at spend in terms of, GDP to cellular revenue, all those things clearly shows that there is a lot of upside opportunity which is there. We all need to work together as an industry so that we can unlock the full potential. And I'm telling you, this will help Indonesia on their bigger ambition. And that is where, we all have to put our mind that we are putting our capex as an industry in the right place. We are making sure we are sweating our asset so that it is sustainable for shareholder also.
Vikram, thank you so much for that. Vikram Sinha, President, Director, and CEO at Indosat Ooredoo Hutchison. By the way, the second telecom player in Indonesia, worth about $6 billion. Now, still to come, our exclusive interview with Morningstar CEO Kunal Kumar. We'll be discussing how AI is impacting investment decisions and changing the world of finance. That's coming up next. This is Bloomberg. Welcome back. Markets are waiting for Nvidia, looking for catalysts to drive them higher. Taking a look where we are in terms of U.S. futures, currently up about 0.1%. Nasdaq futures also in positive territory. Remember what Goldman said, it is expecting a further upside to the S&P, I think about 10% from here till the end of 2025. It is a strong dollar environment, of course. It is a high yield environment as well. We saw how 10-year yields touched 4.5%. Some say it could get to 5%. Will it? Won't it? Well, let's see. And the business world is increasingly leaning on Nvidia as a bellwether for the development of AI as the next big thing. Let's get perspective from Kunal Kapoor, CEO of Morningstar, which provides investment research and investment management services. Good to have you with us.
Great to be here. Thank you.
Waiting on Nvidia. How will this play out? I mean, there seems to be exuberance. Nothing can stop this rally.
Well, I always tell folks that when you're looking at returns, it's important to think about the fact that you can have companies that do great, But stocks ultimately reflect the value of their cash flows. And in many cases, our analysts would tell you today that stocks have moved so much that so much growth is already priced into some of the stocks that you keep hearing mentioned frequently. So we would say that companies can do well and will likely continue to do well, but expectations for a lot of the market broadly have probably started to exceed the fundamentals.
So exercise caution.
I think you always want to exercise caution is one word. The other word that I would use is keep your expectations in check. Markets have been so good for so long that I think people have forgotten what it feels like when you have to lower your expectations. And history would just tell you that it's probably a good idea to just expect a little bit less.
So when there's euphoria, there's a lot of room for disappointment.
Yes.
I mean, in terms of correction that could happen, I mean, what are your expectations for that?
Yeah, don't ask me to predict a correction because I'm going to get it wrong. But the way I think about it is if you're an investor, let's say, and I'm here in Singapore, and one observation I'd have is that over the years of coming to Singapore, the percentage of locals who are investing in U.S. stocks has increased in a very material way. And that's happened because returns of U.S. stocks have been great, right? North of 10, 12% over the past decade. I think that's incredibly hard to replicate if you're going to own them over the next decade. Does that mean they won't do well? No, you can probably still get an inflation-beating return. Are you likely to be able to replicate a 10, 12% annualized return on, let's say, the Morningstar U.S. Market Index? I don't think so.
Why not? Trump's policies, yes, they're going to be inflationary, but they're also meant to be pro-growth.
They could be, but this is a question of what's priced into the market.
What's priced into the market?
Well, you can see just in the past few weeks since the election that many stocks have moved in different directions based on expectations of what may or may not happen. And so when you have certain stocks and sectors moving 30, 40%, I would argue, and both ways, I would argue that perhaps you're starting to already have things priced in. And so even if it plays out that way, perhaps the markets have already said it's going to be playing out that way.
Of course, we have a higher yield environment.
Yeah.
We've got 10-year yields at, well, touching 4.5%.
Yeah.
Let's say could get to 5%. We would like to ask you when that might happen, but you may not answer. But when might we see 5%? And at what yield level would appetite for stocks be impacted?
Yeah. Well, for sure, it's hard to predict exactly when that may happen. And in some ways, the bond market has moved, not in some ways, the bond market has moved in the opposite direction as the equity market. And you're right. When yields start to go up, at some point, investors are going to say they like that yield. And you saw that a couple of years ago, and you could see that again today. Right now, as you said, it's risk on, and investors are discounting where yields are moving. But that is a real factor in terms of how you discount your cash flows. And so I think if it continues to move in that direction, it starts to make bonds look more attractive.
How are you positioning for 2025? How would you position for that?
Yeah, I would go back to what I said, which is you want to...
U.S. exceptionalism.
I would continue to think about rebalancing into areas that have underperformed, right?
Such as?
So if you're looking at it from a sector perspective, our analysts in general would tell you look at energy, look at communications. If you're looking at it by a market cap perspective, our analysts would tell you look at small cap. If you're looking at it from a style perspective, our analysts would say value. So there's definitely going to be pockets that will do better than others. And it's less about 2025 in my view, but really what's going to happen in the next 3 years, 5 years, 10 years. 2025, it's very difficult to predict what happens over 12 months.
So if you take a look at a 2 to 5 year perspective, longer term perspective, right, do you see potential in getting into China? There's a lot of value, some say, including
so
how
today, if you look at what our analysts would tell you, there's a lot of stocks that our analysts are recommending in China, and it's largely driven off the view that domestic consumption will continue to do well. And so we have a lot of names that are domestically focused. And going back to your earlier point, there's some geopolitical uncertainty. And so a lot of what we're recommending in China has to do with local consumers as opposed to anything at the geopolitical level. And so there are certainly opportunities there.
So China is in the right direction with its stimulus, but more needs to be done to prop up sentiment, to reverse.
I'm not a macro investor, so I don't believe in whether stimulus comes or not. I think about this from a long-term perspective, what's going to happen. We believe that Chinese consumers are going to be stronger over the long term, and as such, we like stocks that are based on domestic consumption. And we think over 3, 5, 7 years, that story is likely to play out.
So if you take a longer-term perspective, China versus India, where would flows be headed?
Well, right now flows have headed to India, and I think that's for two reasons. One, I think there's just a feeling of more certainty, especially among foreign investors, that they have access to their capital. However, I would say on a valuation basis, that is already reflected pretty heavily in Indian stocks, which have had a very, very strong run. And so the likelihood for some level of disappointment is higher than in China, where the likelihood for some positive outcomes is maybe a little bit better. You saw that a couple months ago where you had sort of a bit of a rally in China and things have come back down. But you sort of see that how small things can kind of change the equation, if you will.
Of course, when you take a longer-term perspective, you also have to take a look at how AI is shaping the financial world. I mean, how do you see that playing out?
Well, I think one of the most interesting ways it's going to play out is how advice is given. And so today, for example, if you're a financial advisor, you're interacting with your client, but your client really is starting to interact with technology in a different way. And so you're going to have to find new ways to justify why your client is paying you 100 basis points, for example. And so I think AI is going to change the mode through which advice is delivered, and technology will become more central in the way we interact with our investments.
What's been underpriced when it comes to the impact that AI might have?
It's the sectors that maybe don't have a whole lot to do with AI. I referenced energy as an example. Some of our analysts would also tell you that the picks and shovels, not necessarily the companies that are making the chips, but the suppliers. And so we've had some of those, recently kind of rated more highly. So I'd be looking for those that would benefit without necessarily directly owning them today.
And when it comes to ESG investing, you talked about how AI can bring some transparency.
Yeah.
I mean, how will that look like?
Well, I think it's more about consistency and continuing to make sure that the data that is produced there can be comparable, and that materiality, financial materiality, is something that can be proven out. So AI can help with the data collection and the comparisons, but ultimately a lot of the good work needs to be done on financial materiality.
Okay, before we let you go, just one final question. If you take a longer-term perspective, what is a must in terms of how you should be invested?
Well, I think you should be rebalancing your portfolio out of sectors and out of markets that have outperformed and just getting back to your targets. I think we're in that type of environment. We're not doing so. Potentially over 3, 5, 7 years could impact your return. So I'd be rebalancing into the parts of your portfolio that are below their target allocation.
All right, Kunal, good to have you with us.
Great to be here. Thank you.
Kunal Kapoor, CEO of Morningstar. Let's take a look at where we are in terms of the markets. Japan in focus, some of the movers that we're seeing for that benchmark. Seven & I jumping on that report that the Ito family is seeking a deal by March. Of course, this is the founding family of the retail giant, is looking to complete a deal to take the company private by the end of its fiscal year in February. We have that stock moving up by more than 7%. Tokyo Gas higher by about 12%. And look at that surge in Kadokawa, currently up by almost 19%. Again, Seven & I, that is one story we're keeping a tab on, and how the Ito family is seeking a deal by the end of March. Before we go, I'll look ahead to tomorrow's program. We'll get market insights from Deutsche Bank's Stephanie Holzer-Jen, including the outlook for the relentless AI rally and a closer look at Nvidia's results. Those results front and center, driving sentiment in the market today. That is it for Insight. Horizons, Middle East and Africa is next. Keep it here with us. This is Bloomberg.